Bitcoin just hit another milestone that has the entire crypto world talking. While traditional markets struggle, Bitcoin continues to defy expectations. Today we're diving deep into the latest Bitcoin news, predictions, and analysis that could change everything. But first, hit that subscribe button and ring the notification bell. New subscribers get our exclusive Bitcoin analysis guide absolutely free. Join our growing community of over 50,000 crypto enthusiasts who never miss our market insights. Let's start with Bitcoin's current price action, which has been absolutely fascinating this week. Bitcoin is currently trading at $43,500. Trading volume has increased by 30% compared to last month. This puts Bitcoin's market cap at approximately $850 billion. Technical analysis reveals strong support at $42,000. The 50-day moving average continues to act as dynamic support. RSI indicates Bitcoin is neither overbought nor oversold, suggesting room for movement in either direction. Fibonacci retracement suggests the next major resistance at $47,000. In the wake of landmark events like the spot Bitcoin ETF approvals, the financial world is buzzing. Leading crypto analysts are making bold predictions for Bitcoin's near-term future, suggesting we're at a critical inflection point. While opinions diverge, the conversation is more intense than ever. Among the more conservative voices, JP Morgan analysts predict Bitcoin could reach $55,000 by year-end. Their forecast is rooted in the undeniable wave of institutional adoption. Major asset managers like BlackRock and Fidelity are accumulating Bitcoin at an unprecedented rate for their spot ETFs. This, coupled with emerging regulatory clarity, is creating a more stable environment for large-scale capital, providing a solid price floor. However, the path forward is not without risks. Cautious analysts warn of a potential short-term correction down to $38,000. They point to macroeconomic headwinds like stubborn inflation and higher interest rate policies. If these conditions worsen, a risk-off sentiment could sweep across markets, impacting digital assets like Bitcoin. But when we zoom out from the day-to-day noise, long-term forecasts remain incredibly bullish. Short-term corrections are seen by many as healthy consolidation within a much larger bull market. In fact, multiple analysts are maintaining their $100,000 target for next year, viewing it as a key psychological and financial milestone. This long-term confidence is built on fundamental principles. First is Bitcoin's unchangeable scarcity. Unlike fiat currency, there will only ever be 21 million coins, making it a form of digital gold. This scarcity is amplified by the recent halving event, which cut the new supply in half. Historically, this supply shock leads to significant price appreciation within 12 to 18 months. Finally, Bitcoin's adoption curve mirrors the early internet. Comparing user growth, we are somewhere equivalent to the internet in 1997. This suggests that despite recent gains, we are still in the very early phases of global adoption, with the most significant growth potentially still ahead. Regulatory developments continue to shape Bitcoin's future across major economies. The United States is moving toward clearer Bitcoin regulation frameworks. Bitcoin ETF approvals have opened the floodgates for institutional investment. The European Union's markets and crypto assets regulation provides comprehensive framework for Bitcoin trading. These regulations bring legitimacy but also compliance requirements for Bitcoin businesses. Regulatory clarity has boosted institutional confidence in Bitcoin investments. Countries with clear Bitcoin regulations are seeing increased adoption and innovation. Clear taxation frameworks help both individual and institutional Bitcoin holders plan effectively. Corporate Bitcoin adoption is accelerating as major companies add it to their balance sheets. This is a calculated move to hedge against inflation and diversify treasury reserves. It signals a profound long-term belief in Bitcoin's future as a superior digital store of value. Tesla's landmark $1.5 billion investment was a watershed moment, powerfully validating the digital gold narrative. The move signaled to corporate treasurers everywhere that Bitcoin is a serious alternative to traditional reserve assets in the 21st century. No company embodies this more than MicroStrategy. Led by CEO Michael Saylor, they've adopted a Bitcoin standard, relentlessly acquiring a massive treasury of over 200,000 coins. For them, Bitcoin is the core of their corporate strategy. Bitcoin's utility as a medium of exchange is also growing. Payment processors are integrating options using the Lightning Network for instant low-fee transactions. This challenges legacy payment rails, offering merchants lower costs and consumers an easy way to spend their digital assets. In a major sign of acceptance, traditional banking giants are embracing Bitcoin. They're rolling out institutional-grade custody for secure storage and dedicated trading desks for high-net-worth clients. By integrating Bitcoin, these legacy players acknowledge undeniable client demand and the asset's permanent place in finance. The floodgates for institutional capital have opened, with billions pouring into Bitcoin products like spot ETFs. Even conservative pension funds are making small, strategic allocations. They recognize its value as a non-correlated asset for diversification, and a small percentage represents a significant vote of confidence. A crucial piece of the puzzle is the new insurance market. Major insurers now underwrite policies covering Bitcoin holdings against theft and key loss. This de-risks the asset for large investors, providing a foundational safety net that allows the ecosystem to mature securely. Alongside institutions, a grassroots movement is exploding, especially in developing markets. For millions facing hyperinflation, Bitcoin is a lifeline and a censorship-resistant savings technology. Powered by the Lightning Network, it's also revolutionizing remittances with instant, low-fee cross-border payments, empowering individuals globally. Bitcoin mining continues evolving with more efficient operations and sustainable energy sources. New generation ASIC miners deliver unprecedented hash rates while reducing energy consumption. Bitcoin's hash rate reached new all-time highs, making the network more secure than ever. Over 60% of Bitcoin mining now uses renewable energy sources. Mining profitability remains strong despite increased competition and difficulty adjustments. Bitcoin's difficulty adjustment ensures consistent block times regardless of mining participation. Mining pool distribution shows healthy decentralization with no single entity controlling majority hash rate. Market sentiment analysis reveals interesting patterns in Bitcoin investor behavior. Whale wallets continue accumulating Bitcoin, with large addresses adding significant holdings. Retail investors are dollar-cost averaging into Bitcoin despite short-term volatility. Bitcoin's correlation with traditional markets has decreased, reinforcing its digital gold narrative. On the technical front, Bitcoin's Bollinger Bands are in a tight squeeze. This classic indicator suggests low volatility is ending and the asset is coiling for a significant price move that traders are watching closely. Beneath the price, on-chain metrics reveal a network that's stronger than ever. The hash rate, a key measure of security, is at record highs, while transaction activity shows sustained growth, pointing to increasing real-world adoption. This strength is reflected in investor conviction. Long-term holders continue accumulating with 90% of Bitcoin unmoved for over 6 months. This reduces sell-side pressure and indicates a powerful belief in its future value. We see this as exchange outflows consistently exceed inflows. This trend shows a preference for self-custody over exchange storage as investors move assets into secure wallets, reducing the immediately available supply. Innovation is also accelerating. Bitcoin's Lightning Network continues its impressive expansion, growing its capacity to enable instant, low-cost micropayments globally. This Layer 2 solution is crucial for Bitcoin's evolution as a medium of exchange. Beyond payments, other Layer 2 solutions like stacks are unlocking new potential, bringing complex smart contracts and decentralized applications to Bitcoin. This expands its utility, all while leveraging its core security. The base layer itself is also evolving. The Taproot upgrade enhances Bitcoin's privacy and efficiency, making complex transactions cheaper and more discreet. This crucial update also paves the way for more advanced scripting capabilities. Looking ahead, developers are proactively addressing the theoretical threat of quantum computing. Research into quantum-resistant cryptography is active, ensuring Bitcoin's security can be upgraded to meet future technological challenges. This has led many financial advisors to recommend a small strategic allocation to Bitcoin, typically 1 to 5%. They cite its potential as an inflation hedge and its low correlation to traditional assets for portfolio diversification. For investors, dollar-cost averaging remains a highly effective strategy. This disciplined approach of making regular investments smooths out entry points over time, removing emotion and mitigating the risks associated with Bitcoin's volatility. Finally, navigating this market requires robust risk management. Using tools like stop losses and defining your position size are essential for protecting capital and investing responsibly in this emerging asset class. To summarize, Bitcoin shows strong technical fundamentals, positive regulatory developments, and growing institutional adoption. Price targets range from $55,000 short-term to $100,000 long-term. Mainstream adoption accelerates with better infrastructure and regulatory clarity. Dollar cost averaging with proper risk management remains the optimal approach for most investors. If you found this analysis valuable, smash that subscribe button for daily crypto insights. Next week we're analyzing Ethereum's upcoming developments and their impact on the entire crypto market. Share your Bitcoin predictions in the comments below and don't forget to like this video. Thanks for watching, and remember, always do your own research before making investment decisions.